Let's get on to our key interview of the week. I've got with me Eric Coffin. So great to welcome him back to the show. Eric, thanks for finding time this weekend.
Thanks for having me back, Mike.
Of course, Eric is founder of Hard Rock Advisory. And I got to say this, Eric, we're in a business, whether I'm talking about where interest rates are going or what this economic thing is doing or, talking about individual stocks, we're in a business that's really bottom line. And that is, how are you doing for me? Well, I just got to say, Hard Rock Advisory added 11 companies to its list in the past year. However, everyone's listening to me. They added 11 companies to its list. And those 11 stocks have averaged a total return of 340% so far. I think you should retire, actually, on that one. That's like having a 5-home-run game. It ain't getting better than that.
Yeah, I mean, hopefully you're wrong, but I have to be realistic when it comes to these things. I know my old mentor, Bob Bishop, telling me back in the day when he passed his subscriber list on to my brother and I, make sure you go out at the top. It really sucks to go out at the bottom.
Well, I'm not suggesting you retire, but I mean, that's a hell of a market. But the thing you, of course, did right with the Hard Rock Advisory is you identified two things, it would seem to me, and please add to them, but you identified, hey, this is the beginning of a move in gold, a significant move in gold. But then really interesting, I thought, is you identified, and you did it for our audience here, what kind of companies may be some sort of boom beneficiaries of this. And for example, I know in the last, few months, you've had 3 of those companies get takeover offers because you were looking for a particular kind of situation.
Yeah, I was trying to focus, at the tail end of the bear market when it was impossible to raise money. The only companies I was able to get interested in myself and talk to readers about were what I refer to as high margin situations. Most of these were development level companies, and by that I mean they had managed to define a resource, but that resource wasn't in production yet. But these were high margin, relatively low capital cost situations, the type of things that a larger mining company would be interested in because it would have a really good marginal return if they bought it, which is basically a roundabout, complicated way of saying they were takeover targets. And indeed, 3 of those companies in the last 6 months have been taken out. There were a couple of other ones taken out late last year. I think I've had 7 in the last year that were taken out, which has made things a little tricky, I have to admit, because it's getting harder and harder to find good development level stories because they're basically disappearing. I mean, you've got a bunch of big miners that have maybe not the smartest acquisitions they made during the last cycle, and my sense is simply that the mining sector has probably changed for the better. I mean, they're being a bit smarter this time. It's not just about size. There are companies out there doing really well because they have giant, crappy resources, frankly, and that they're what are called optionality plays, and that's one way to go if you think the gold price is really going to move. My personal philosophy has always been I'm interested in looking at companies that have projects to me make economic sense. I would rather have the inherent protection of ounces that make sense, that are producible at a profit, rather than saying, I'm going to pick this stock because if gold goes to $2,000, this might be economic. I'm interested in stuff that makes sense right now. And those are obviously the first ones that are going to go. Those are the first ones that companies come after. And the list is getting short, I got to say. There's not many good development stories out there.
Well, it's funny. That's absolutely what occurs to me is when I love it when you identify, a move in the market, the move proves out, and then everybody still is the way. Seriously, it may be the thing I dislike most about investing, and in your case, giving advice like this is everybody's, oh, that's great, Eric. What have you done for me lately? What's next?
Yeah.
And as you say, the environment gets more difficult once, you obviously were early in identifying these situations, but now, as money moves and the market moves higher, price of gold moves higher, then there's more and more eyes searching for the same thing, and slowly it depletes the number available to you. So, it becomes a more difficult market.
Yeah, and it is. I mean, one thing that I've shifted to a couple of other things, and then partially their personal preference. I mean, I grew up in a mining family. My late brother and I owned an exploration business way back in the day. I mean, he was the technical side, I was the money side. And I've always had a soft spot for exploration stories. And, part of my sense of the change here wasn't just that gold had bottomed, but more importantly, that the sector had bottomed. And by that, I'm not just talking about a change in gold prices. The more important thing, I think, is a change in sentiment.
Yes.
And what that means is you do have people increasingly focusing farther down the food chain. You can see the money moving down the food chain. If you look at the venture exchange, for instance, the number of companies that have been doing $5 and $10 million financings in the last 3 months has just exploded. I mean, you've got money looking for this stuff. And the situation that sets up, that allows me to try to find, I'm still adding new development companies. The last company I added was a new development level company, but I'm also adding exploration stories where I see the potential for very large target size. And what I'm really trying to find for readers is stories where if I can be one of the first guys in, or ideally the first guy in, and the market starts to latch onto it later, you set up a situation where you get a substantial amount of anticipatory buying as you get close to the real hardcore testing, the drilling, the truth machine. And I've managed to find a few of those, and what I keep telling readers is, look, we started talking about this at 20 cents. It's now 80 cents. They haven't delivered any drill results yet. You have your marching orders. You know what to do. You take enough money off the table that this stock owes you nothing. Ideally, you take enough money off the table that you're up 100%. You got a free ride on a drill program. If it works, great. If it doesn't, we move on to the next.
And over the years, I mean, if you've been involved in this so long, as you say, right from the ground level into the analytical side of things only, that, writing the Hard Rock Advisory, I mean, there's ways to reduce the risk here, and you've just added to one of them I find that we got too many people, especially when you get into a positive market like this, who want to be the all-time only home run ever hit. And that's not how you manage money, and that's not how you are realistic about the risks associated with this sector.
Well, I mean, I got to be, to be honest, I'm one of the, I've been that guy in the past, believe me.
Oh, and were you sitting right beside me at the time, Eric? Because I was on the same bus, believe me.
Oh, well, one of the things, I occasionally get, emails from long-term subscribers that are, and they're guys that have become friends, and they're just, they're being kind of, they're joking with me and going like, are you gonna tell me to take profits again? And I keep telling them, like, look, we just went through 5 years of bear market. I promised myself the whole way through that, I was going to tell you guys this over and over and over and over again, because there's so many things on the list right now, and this is how it goes early in bull markets, because this was a market that got taken apart. I mean, it was down 85%. When these things turn, the companies that get focused on tend to generate large gains quickly. That's great. And yes, some of these companies, I'm hoping, make real discoveries, and they're trading at 10 times what they are now. But even so, you've got to play the averages. The simple fact of the matter is, most exploration programs will not work out in the end. Most properties will not become mines in the end. You've got to play the averages. You have to.
Interesting stuff, though. I've got to take a break. I've got to come back. Eric's, of course, Hard Rock Advisory. You can find him HAR. Oh, wait. Can I start that again? HRAadvisory.com. HRAadvisory.com. Hard Rock Advisory. But I want to ask, we'll come back to this statement right there that gold is bottom. We'll ask him about that within that context. But also, I want to come back to something he said about which companies he's looking to identify now as the place to be. Eric Coffin, as I said earlier on, 11 companies added to his list in the last year, the average return of 340%. Let me just put it this way. My portfolio didn't do that well. I'll come back with Eric in just a couple of minutes on the Money Talks Network. Coming up, I've got a shocking stat. It may be the financial story of the next 15 years. In fact, I'm betting it is. I'm betting large that it is. I'll chat with you about that in a couple of minutes' time. But right now, Eric Coffin, he's Hard Rock Advisory, HRAadvisory.com. And again, I want to reiterate, I get a lot of mail coming up, and some say I disagree with that, or I got, you know what, in the end, and this is a business that's straightforward. Did you get it right? There's no other stories that are important. Did you get it right? Well, Eric Coffin employs a specific approach to the market, to the gold sector. He added 11 companies to his list, spectacular returns to date. Eric, I want to come back to two things that you've mentioned, but let's come back to the kind of company you're looking for right away.
Okay. Okay, I'm going to. I'll mention a couple of different situations, and these two are both development level. I mean, I can come up with a couple of exploration stories as well if you want. I'm picking these two intentionally because I happen to be the last two that I added to the list. The most recent one is a company called GMV Minerals. They've got about 500,000 ounces of low-grade oxide gold in Arizona. I took a look at it. I actually found it because I was doing searches on metallurgical news releases, which is about as exciting as it sounds. But the reason why I was doing that is and this comes back to talking about margin and what makes sense. When you're looking at these low-grade heap leach type deposits, metallurgy is extremely important. And I just sort of tripped over this deal looking at metallurgy results. It has an extremely nice-looking metallurgy. They're doing more tests right now, but it looks like it could be what's called run-of-mine. That has really big impact on the economics of the deposit, but it also looked like it had exploration potential. So I added that to the list at about 20 cents. It's trading at about 65 now. But I'm mentioning that one first because if you want to learn more about that company, there is on the upper right side of my homepage a place where you can just throw in your email, and essentially the report that I gave to subscribers is available for free by just going there and adding your email. The company before that was another one that's called Moneta Porcupine. This was a company I'd looked at years ago, wasn't actually that interested in. They've got a project east of Timmins that has now about 4.5 million ounces on it. It's probably more than that. It's been quite a while since they updated their resource. But this was part of a trend in the last cycle, going to, as many ounces as possible, push the grade down, just basically throw everything in the kitchen sink into a pit. I was never in love with that trend, and I have to say that at one level I was wrong, because if you look at a couple of deals like a Cisco that did that, it worked. It's a trend I maybe shouldn't have ignored, but I did at the time. But why I revisited this company and decided to start covering it was it had been very quiet for the last 2 or 3 years. I talked to management. They had decided they were going to go back and basically drill on the northern half of the property. The geology is different there. It has more potential for high grade. Management had come to the conclusion that the market likes grade. They want grade right now. They want margin. So they're doing a financing right now, and they're about to embark on a big drill program. But it also does have 4.5 million ounces. So if the gold price goes to $1,500 or $1,600, it's got a lot of tailwinds anyway. And if they happen to luck out, and there are a few old holes that show decent potential for high grade, if they can add sort of high grade starter areas to this 4.5 million ounces I already have, that's a pretty good mix of exploration potential and some underpinning with ounces that give you a little bit of safety, and it'll go up if the gold price goes up anyway.
Can you give me the symbol on those two? GM?
Yep. The symbol is GMV.
Yep.
And Moneta Porcupine, the symbol is ME on the TSX.
Yeah. I mean, again, what you're looking for, though, when you're describing that is a situation that you're going to be early on that, and then others might pile in, and then you can, as I say, take some money off the table and see how well their exploration does.
Yeah, I mean, to my knowledge, not to my knowledge, I know for a fact, no one else is following GMV when I started. And it was one of those things where, like I said, I came to it through metallurgy, and then when I went and looked at the company, I realized I'd actually known the guy that runs it for 20 years. I hadn't seen him for 10. Mm-hmm. I went and I knew the exploration manager for 20 years as well, so I went and sat down with him with that. The other one was one where I think Moneta is starting to pick up some other coverage now, and again, it's because they've got 4.5 million ounces. Guys are looking for, show me any company that's got a gold resource. And management themselves says, look, we realize that at current prices, this isn't a fabulous deposit. Though I should say one thing that actually helped Moneta, and it was one of the things that got my interest, was because it's a Canadian deposit, because it's in Ontario, the drop in the Canadian dollar from, basically par down to 75 cents does mm-hmm. wonders for their economics. Even though I don't love sort of low-grade sulfide deposits, the economics of that deposit have improved substantially just because of the currency change.
Let me come back to, just because there's only a couple minutes left, just your observation on, we're in the seasonality, the period right now where gold does well. If you look in sort of in that September, October, sort of a tradition, if you look, percentages are that it's a good period for it. But what about the overall market? I mean, when you say it's a bull market, does that mean you think the lows are in place and, we can get some gyrations, but we're not going to make new lows, or that you expect it to go kind of, not straight up, but as you know, but I meant pretty jig-jaggy up, though?
Yeah, I mean, I did. Most of the year I've been saying that I wasn't expecting the summer pullback that everybody else was talking about, because it's not uncommon. I mean, the best analogy that I could find was really 2009. It was obviously a much shorter bear market, but a really, really ugly one for this sector, like it was for every part of the market. When it came out of that, it pretty much moved up for a year, and I think we may be getting a repeat of that. Obviously, in the fall, one of the things we've got to look out for is what the big markets do. I mean, it's going to be hard for the sector to escape if Wall Street gets its head handed to it. And I do have some concerns that we may not have a great fall in New York, because I personally don't understand what's holding prices up. But the trends, physical gold, if you think of actual physical bullion, the big buying season for it in the East, in India and in China, is basically in the fall. They're buying for wedding season, they're buying for New Year's, they're buying for all those things.
I've got to hold us at that, Eric, because time's run out, but I'll give the address again, hraadvisory.com, Eric Coffin.